What's up, YouTube? It's a boy Vusi Max. We're back at it with another one live. Well, I'm not at the Supreme HQ, as you can see. I'm on the road, but you know, it never stops the grind. So I want to drop this one so that when I drop the analysis video this coming weekend, you guys already know not to make the mistakes I'm gonna list in this video. So like you saw the title, it's why you shouldn't predict Forex price action, right? So I know right off the bat some of you guys are thinking, but like the general thing that happens in Forex is we always predicting and all that kind of stuff, right? But here's the difference, right? There's predicting and reacting, right? The other one is proactive, is being proactive, and the other one is not. Obviously predicting isn't being proactive, because once you're predicting the market, which is also what I used to do when I started trading, like in my first couple of months, I would make an assumption of how the market is going to unfold, and then I would stick to that decision. Obviously that would lead to losses in the long run, right? So now when we react to the market, when we're being proactive, we basically look at market cues, right? And those market cues can be in the form of highs, lows, resistance zones, support zones, and also the volatility in the market. Say we get all the right cues to open a trade in the market, and then when we finally open that trade and then we go into losses, obviously once we at that stage, we know what to look at and we know when to close out a trade, right? So I think generally what I'm trying to get across to you guys is there is no system which doesn't have any losses, right? And I repeat, in a more simplified fashion, there is no trading system that guarantees you 100% winning rate, right? So if anybody said they like, if anybody sold you a system that's gonna give you 100% winning rate, you already know not to go that route, right? So even the best of traders, right, still get losses, guys. And I remember with me, the last time I was trading was obviously last year in December, but there was a period in the middle of December where I took more losses than profits, right? I took more losses than profits, but I made more in those smaller number of winners that I took home than I lost in those X number of losses that I had taken, right? So all in all, your trading strategy isn't solely relying on your winning rate, right? Because you can have a very low winning rate to a very high losing rate and still take money home at the end of the day. So what you need to focus on is these 5 things I'm about to highlight to you, so that you don't end up losing more than what you're making in this market by predicting, right? So the first thing you need to do is you need to accept your losses, right? You need to accept your losses and also evaluate your losses. If I open a sell in a downtrend, meaning there's more chances of the trade actually playing out in profits, right? If I open the trade in a downtrend and I see the market take a pullback or retrace for a bit, taking me into losses, there are 2 types of people in that scenario, right? So the first person in that scenario will be like, it's a downtrend, so this has to go down. That's predicting. And the second person will say, the market is pulling, I think the market is pulling back, but I don't know for sure. So if I cut my losses quickly at the rate at where the price is, if I cut my losses there, then I can open a sell stop, which is going to trigger when the price of the market continues with the trend, meaning when the price goes down again, that sell stop is going to trigger, and then I'm going to be placing the market again, right? So the second person cut their losses quickly. The first person said, just because it's a downtrend, it's going to continue going down. I don't know when, but it's going to continue going down. And 9 out of 10 times, the first person, that's when they'll take a loss. And the second person, the price might not even continue with a downtrend, but the fact that they secured or they close that loss, meaning they can't lose any more than that small amount they already just closed out, right? So that's what I want you guys to do. I don't want you guys to get married to these trades and think this is the trade that's gonna make me a millionaire or whatever. Just if the trade is going against you, keep it at that, cut the loss, and look forward to another trade, right? We're still in January, so don't be trading like we're in December, right? So let's go to number 2. Reevaluate your Forex trading strategy, right? So if you're going through a losing streak, like I said, last December, at the beginning of December, I went through a losing streak where my trades were kind of going haywire. I wasn't making, it was kind of like the market was being random for some reason. I don't know, but I was following the right cues that I usually follow, which I tell you guys in the videos that I drop. If you don't know what I'm talking about, go look at the older videos and you'll see what I'm talking about. I follow the same cues when I open these trades, the buys and sells, right? So in December, I was opening these trades, and for the longest time, I think for about a week and a half, I was just closing out losses, right? But I was capping them at the smallest amount I possibly could. So at the end result, I ended up like losing a very small amount of money compared to what I ended up making after that 1.5 losing streak week period, right? So at that point, I had to reevaluate my strategy, right? I know that the strategy is solid, guys, but it doesn't mean there's a truck passing, guys. It's kind of noisy. I know that the strategy is solid, guys, right? But it doesn't mean that I should stop learning just because the strategy is solid, right? I looked at the time frames. I looked at if I should like go to the smaller time frames and scalp in the meantime. I looked at the higher time frames if they are like communicating something that's there in the smaller time frames and stuff like that. I had to like reevaluate where I might be going wrong, because at the end of the day, the market is the boss. No matter how many strategies we can have, no matter how tight our strategies are, at the end of the day, this is all about the market. So we need to just follow what the market is doing. All right, so let's go to number 3. Make the necessary changes, right? So if we evaluate the strategy and we realize that maybe if I trade in the 1 hour time frame, there are even more chances of me taking home a home run than me trading in the H4 time frame while I'm in a losing streak. That would mean that I would have to go practice and trade the strategy in the 1 hour time frame, and maybe that way, that's when I'm gonna start getting I'm gonna start getting more winning trades, right? Versus just like taking losses and not even like investigating to see like where can I improve, what can I do, like, because at the end of the day, it's all about the money. So we need to find where the money is. So that's why I'm saying you need to make the necessary changes, and you need to figure out what you can do or where you can go and put your money, because sometimes you just need to change an instrument. Sometimes you might have to go trade commodities in the meantime. Sometimes you might need to trade a higher time frame. Sometimes you might need to trade a smaller time frame. But overall, there are changes that needs to be made if you're making losses, right? Let's go to number 4. You need to develop a bias so that you don't predict the market. What do I mean you need to develop a bias? I already have a bias that I teach to you guys. I have an uptrend and I have a downtrend. Those are 2 market biases which like help us to know if we should buy or we should sell. If it's an uptrend, we buy. If it's a downtrend, we sell. So already by having those 2 biases, it helps us to kind of like not just trade random things that we're just hoping will result in us making profits or whatever. So it prevents us from predicting the market. And then because when we have a bias, then we need to follow cues, highs and lows, support and resistances. And then that means we're reacting to what the market is doing instead of predicting where the market is gonna go. The two are different because when you're predicting, it's like you're looking at the market and you're saying, let's say this is the market. You're saying the market, you're gonna go this way, right? And then if you're being reactive to the market, it's kind of like saying, hey, market, show me where you're going. And if the market goes there, we buy. If the market goes there, we sell. So I hope you understand the analogy that I'm making, guys, right? So let's go to the last point that you need to like engrave in your minds, guys, right? Hope you're following me. Drop a like, comment, and subscribe to the channel if you haven't. I appreciate that a lot. I know when you're doing that, I need to drop more videos for you guys. All right, let's go to number 5. Number 5 is you need to accept that it's totally impossible to have a 100% winning rate. All right, just by what I've said, the previous 4 points, at this point I really don't have to tell you guys that it's impossible, because you already get the idea, right? This thing of having a system that wins all the time, that's impossible in this business. So if you're in this market looking for someone to teach you how to win 100% of your trades, then you're in the wrong business, right? You need to understand that the market, to be a success in this market, you need to stay at the top of your game. You need to minimize your losses. And I know a lot of people say this a lot: minimize the losses and maximize your profits. But really, there are ways to really do that, and that's what you need to find out. You need to find out when to trade, when to leave the trades, meaning when to close out your losses, when to close out your profits, because this thing of letting your trades run forever also doesn't exist in the market. You need to know when to close your profits so that you don't become too greedy. I have also lost profit so many times by just letting it run and thinking it's gonna keep going up, right? That's totally impossible. We need to know, have targets, and have limits of how much we can lose, have targets of how much we want to make. And once we're at that point, we need to secure. Forget, it's not the last trade that you're opening. There's still about to be many more trades after the current trade that you have. So in conclusion, lot sizing is impossible. Don't increase your lot size to a point where it seems like you're just trying to bank $1 million overnight. It's impossible. And sometimes I don't even blame you guys, because that's what you're told about Forex when you start trading, right? But I'm here to tell you now that, look, I wanna be a huge success. If you wanna be a huge success too in Forex, just follow me. I'm gonna show you all the ins and outs of this thing. But one thing for sure is there isn't any overnight successes, and there isn't any $1 million trades overnight. There isn't any 100% winning strategies, and there isn't any market predictions or whatever. There's only reacting to the market, listening to the market, having a system for the market so that it doesn't choke your ass. And that is just all I have to say in this video. Like I said, guys, the market is boss, but after the market, supreme traders are boss. I'm gonna be dropping an analysis this weekend. Stay tuned for that. Subscribe if you haven't. Thank you guys for watching. I will see you on the next one.